And that brings us to our stock of the day, which is City Chic. So we saw shares absolutely go wild out of the gates this morning, up by about 42%, still up around 43%. And I was struggling because I'd missed a bit of an article in the Fin yesterday pointing to AFR rich lister Brett Blundy becoming a substantial holder. So apparently he started buying the stock in December. He now owns 17.4 million shares, or 7.3% of the company. So he is a big name in Aussie retail. He has backed Bras and Things, Levisa, and Honey Burdette, which I'm not familiar with, but still, that's some big news. I did note this morning that Oz Super has reduced its shareholding in the company, and you know the story with City Chic Collective found itself with a lot of inventory post-COVID. It warned the market back in December in the wake of its AGM that things had taken a big turn. It said that the Black Friday, Cyber Monday, Christmas shopping period was going to be instrumental in terms of how the half in fact ended. We haven't got a further update in the new year coming from City Chic, but clearly investors have been voting with their feet today and seeing his endorsement of the company as big news. So I kind of outlined, guys, what the overall story is with City Chic. What do you guys at Maqro Capital, how do you view this company in particular?
Yeah, this is just classic people jumping on the back of the whale at the moment, I think. Look, it's up quite considerably, as you mentioned, but it's definitely on an earnings downgrade cycle. I mean, if we sort of zoom out a little bit on the graph, it's gone from $6.80 to the 70-cent mark. That's never a good sign when it's over a period of around sort of 18 months as well. And this hasn't just been sort of caught up necessarily in the retail sell-off. It's actually been dropping very heavily off company-specific news. So each time it's basically brought out a news or an update to the market, that's where it's been getting hammered as well. So look, I think this is probably one I'm just going to let go through to the keeper at the moment. I think it's probably more so speculation than investing. Obviously, Brett Blundy getting behind the company as a substantial owner, but it's a little bit like trying to sort of catch the falling knife, I think, with this one. So look, I've talked about entering the retail space. There is some good valuations in that space. I don't necessarily think this is one I'm going to jump all over. I'd rather something a little bit more defensive with more stable earnings as well. So I'll probably have to give that one a sell or just stay away from, at least for now. Yeah.
Sorry, we need to get to know each other, because if you say to me you'd rather a defensive one, the question is like what?
Good one. I mean, we've talking a bit about it. Baby bunting.
Okay. Even though it came out with that trading update earlier this week that saw it sold off, so you're seeing value.
Absolutely.
Okay.
So there were a couple of risks involved in it, and look, it's going to be one of those things when you get these stocks low down on the range, they can continue to sort of downgrade. Look, Baby bunting, they released that update. I think they were down around 10% on the actual day as well. Now, a couple of things that they mentioned in that update. Their sales are still really strong at the moment. So their sales haven't gone down. It was a lot to do with the actual underlying profit. They've been opening up new stores, for example, so they've been spending money there. They talked about the increase in their margins, basically saying that they've been squeezed, but they actually improved them from the last report as well. So I think people are sort of somewhat focusing on the wrong things, and particularly with Baby bunting, it's got a stronghold on that market. So when they start to struggle, other businesses are actually struggling more, and they're actually picking off market share, which is something that they mentioned in that report as well. So short term, not so great, but yeah, come out the other side a lot better off, I think.
And that's what I call a bonus buy for you and our viewers. You're welcome. All right, Grady, let's get back to the stock of the day, though, City Chic. What's the view?
It's a hold from me. So UBS, Macquarie and Citi all have a hold. I have a hold on it. A tough 2022. Shares are down 86%, as we said, up 12.5% and 25% on the news of Blundy. Blundy is great. As Brodie said, it is speculative news. He only holds a 7.3% stake of the company. He's not a major he's one of the shareholders, but has not a controlling stake in the company. He has experience in Levisa, Bras and Things, and Honey Burdette. Bras and Things, Honey Burdette are both underwear brands, and Levisa is fashion jewellery. So he hasn't got experience in the City Chic kind of really niche market that it is, plus size clothing. And I much prefer the likes of Best and Less heading into 2023, with a more value proposition, we are seeing consumers moving into value shopping as opposed to fashion shopping. So the staples of Best and Less are exactly where we're seeing consumers spending, especially with Best and Less having such a healthy inventory level. Inventory absolutely hammered City Chic in 2022, and the fact that we're expecting consumer retail spend to go down soon with the rising interest rates. How are you going to sell off all the inventory they're holding? So I don't know how that's going to fare out for them in 2023, but no, it's a no for me.
Look how quickly Grady got on board with the bonus buy. So that's a no. It's a hold if you're in it for City Chic, but it is a bonus buy for Best and Less.
Yeah.